Welcome to another S&P 500 Trade Watch analysis. Today is October 1st, 2022. The S&P 500 finally broke below the June's low, and the market participant fears is starting to increase. So will we see further sell-off this coming week? In this video, we'll analyze the S&P 500 ETF, the SPY, the NASDAQ 100 ETF, the QQQ, the Russell 2000 ETF, IWM, and a couple of the FANG stock, Apple and Tesla, and see where they might be headed in the coming week. So stay tuned. Starting off with the SPY, the price tried to fill this gap here and got rejected in the middle of the gap. Then on Thursday, it shifted the value down and broke below this low volume zone here into the Friday's close. Now, one notable thing is the price did not tag the lower range of the weekly expected move or the upper range of the weekly expected move last week. And that's been quite a while that the price closed inside of the weekly expected range. So that's a little bit of a change there. Now for the coming week, the upper range is between 372.50 and 369. And on the lower range is between 345.30 and 343.50. Now these are some of the level to keep an eye on for potential reaction. Now these are not absolute levels, it's a proximity level, so just bear in mind when price get near these level and watch for potential reaction. Now using the 60-minute chart, let's take a look at the potential upside scenario. The upside scenario is to watch the price to come up and see would it be able to fill this gap here on the 60-minute chart between 337 and 370. And see will price be able to push into this upper range zone and possibly come up and fill this gap here. And the downside scenario is for the price to come down and possibly test this low volume zone here between 355 and 353, and then move down to test this 50% retracement level near 343 and possibly move down and tag this lower range of the weekly expected move between 345.30 and 343.50. Now also the other thing is to be aware of this pre-pandemic high level near 339.08. That's a key level to watch. If the price come down to this level, we most likely will see a reaction down near this level here. And the QQQ was able to stay inside of this composite value area and above the value area low until Friday. Then it broke below the value area into the close. And also it did not tag the upper range or the lower range of the weekly expected move from last week. So the upside scenario for the coming week is look for the price to possibly move back into this value area and come up and tag the upper range of the weekly expected move. And the downside scenario would be continue to move down and come down to this 618 level here, this retracement level near 255, and then tag the lower range of the weekly expected move between 256.60 and 255. And for the IWM continue to base below the pre-pandemic high here, and the upper range for the coming week will be between 173.30 and 171.75. And the lower range will be between 158 and 156.70. And here's the possible upside scenario. Look for the price to come back up to the pre-pandemic high and pushes into the upper range of the expected move. And the downside scenario is to come into this high volume zone and work itself down to this lower range of the weekly expected move. And keep an eye on the 618 retracement level near 152.52. Apple finally broke down last week and it lost more than $12 or over 8%. And it moved to this high volume zone last week. So the upper range for the coming week will be 145.70 and 144.90. And the lower range will be between 131.50 and 129.50. Now the upside scenario for the coming week is to watch for Apple to see will be able to get back into this high volume zone and pushes back up into the upper range of the weekly expected move. The downside is to come down to this high volume zone and come down and see would it be able to get a low bounce off the 382 retracement. And if it doesn't, look for a move down toward the lower range of the weekly expected move. And also be aware of this June low at 129.04. Tesla came down and tagged the 382 retracement level near 265 last week, and it is still trapped between these two low volume zones here. And the next week upper range will be 292.50 and 286.25. And the lower range of the weekly expected move is between 244.25 and 240. Now, the upside scenario is to look for a bounce off of this low volume zone near 260 or off of this 382 retracement level near 265 and see would it be able to come back up into this upper range of the weekly expected move. And the downside scenario is it pushes down and get into this balance area and push into the lower range of the expected move. Now, there is this 50% retracement level down here near 215, 216 area, and also the June low down near the 206. So beware of those levels. I'm not saying that it will come down to these levels, but anything is possible. Those are the possible scenarios for the SPY, QQQ, IWM, Apple, and Tesla for the coming week. Now, we just finished the month of September with a new low, and the market participants are a bit more fearful and bearish now. But with the starting of a new month, expect a potential short-term bounce as new money from individual retirement accounts are being deployed. And after this brief bounce, we will likely see the price resume its downward move. In historical context, October has seen its fair share of treacherous market sell-off. One of the best known is Black Monday on October 19, 1987, where the Dow Jones Industrial was down more than 20% in one single day. So be careful, don't let the sucker rally suck you in on buying the dip. It could end up being a bull trap. And toss away any thought on the Fed will pivot just like the BOE did last week by buying its bond to bail out the pension fund. The Fed has repeatedly stated it will err on the side of overshooting the rate hike to ensure it has inflation under control and achieve price stability. So don't buy into all those talking heads saying the Fed will go back to QE as soon as something is broken. It wants casualty to let the market know that the Fed put is dead. And this is a good thing for a long run. It lets people know that you will pay the price for taking risky, over-leveraged bets. So don't forget to smash the thumbs up to help promote this video on YouTube. Thank you for watching and stay safe.